that the arithmetic that I just talked to you about is good for precious metals. I think that the Trump election will be good for the domestic oil industry. And I think it'll be good for the Canadian oil industry, despite Prime Minister Trudeau's best efforts to wreck it. Mr. Trump will be very pro drilling. Mr. Trump will remove the informal ban on new liquefied natural gas construction imposed by the Biden administration. Mr. Trump will do his best to debottleneck transmission facilities, including transmission facilities needed to move Canadian crude and natural gas to the U.S. Gulf Coast refineries.
Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from social medias. Today's guest is one of my favorite guests since he can talk a lot of things, not just specifically one commodity or sector. I would like to welcome my dear friend, speculator, banker, and much, much more. Mr. Rick Rule, welcome to my show.
Lucian, it's a pleasure. I've enjoyed watching your online success, watching your audience grow. So congratulations on that.
Thank you very much, and you are a part of that success. I mean, you're my guest, and our videos are always have a lot of views, so I expect this one will hit also. Let's start with the questions. Rick, my first question actually is about the elections. They are behind us. What kind of world, and especially the markets, can we expect in this new Trump era?
I think initially the markets have been quite strong, although the S&P has round tripped. I think that financial markets were afraid of a Democratic victory, given that the Democrats ran on very much populist, eat the rich platform. If you're rich, a platform that says eat the rich isn't particularly pleasant for you. With a Trump presidency, it's unlikely, as an example, that the carried interest provision will be attacked. It is unlikely, too, that there will be a wealth tax or a tax on unrealized capital gains. I think all of that has Wall Street feeling pleased. Neither candidate, frankly, proposed not to continue manipulating interest rates down. And although it's bad for the country, it's good for Wall Street. Neither candidate, by the way, will back away from a policy of easy money, which, again, while it's bad for the country, is good for the stock and bond market. The jingoistic nationalism of the Trump campaign and the fact that financial markets were confident has led to a relative strengthening of the US dollar relative to other currencies. That has, I think more than anything else, led to a decline in the gold price in US dollar terms, although that decline hasn't happened in currencies outside the US dollar, which have weakened themselves substantially against gold. The principal concern I have is that while it's almost certain that Mr. Trump will cut taxes, it is by no means certain that he will cut spending. He has made a lot of noise about attracting Elon Musk and others to the Department of Government Efficiency. The idea that you establish a new government department to take a look at other government departments tells me something. The audience that you have that is attracted or believes that Mr. Trump will do this should read a book called The Triumph of Politics by David Stockman. For those who are not as old as I, David Stockman was the head of the Office of Management and Budget in the Reagan administration. And this book details how 180 days of politics derailed the entire Reagan revolution. If we don't deal as a society with the outrageous levels of on balance sheet and off balance sheet liabilities that we have, and with the outrageous market share that government enjoys at the expense of the broad US economy, austerity will be forced on us by reality. And my principal concern, I mean, I have other concerns too, but my principal concern, and I've said this on your show before many times, is that the on balance sheet liabilities of the US government exceed $36 trillion now. The off balance sheet liabilities, comprised mostly of entitlements, are estimated to exceed $100 trillion now. Add those two numbers together. Let's be conservative and call it 130 trillion. The IRS estimates, that's the Internal Revenue Service for those people who aren't American, the IRS estimates that the total private wealth in America is $141 trillion. So if you subtract the public debt from the private wealth, there's very little left over. Meanwhile, this is all arithmetic, and neither Trump nor Harris does arithmetic. And I guess the voters don't either. But the total federal revenues before they spend any money are less than $5 trillion, total federal revenues. Meanwhile, the budget deficit is $2.5 trillion a year. In other words, 2 times revenue, assuming that we didn't spend any money on anything else. And estimates as to the accretion of the net present value of unfunded liabilities are between $2 and $4 trillion a year, which suggests that the government debt grows by total government revenues every year. I would ask any of your listeners, particularly those who are good at economics or arithmetic, to explain to me how this is going to work.
Good point, Rick. But when it comes to commodities, would you say that an election of Trump is overall bullish for the commodities?
I think no matter who was elected, that the arithmetic that I just talked to you about is good for precious metals. I think that the Trump election will be good for the domestic oil industry. And I think it'll be good for the Canadian oil industry, despite Prime Minister Trudeau's best efforts to wreck it. Mr. Trump will be very pro drilling. Mr. Trump will remove the informal ban on new liquefied natural gas construction imposed by the Biden administration. Mr. Trump will do his best to debottleneck transmission facilities, including transmission facilities needed to move Canadian crude and natural gas to the U.S. Gulf Coast refineries. So all of that will be good for the North American oil and gas industry, an already good industry.
Okay.
A Trump presidency will likely be good in terms of permitting and regulation for the domestic mining industry, although we don't have much of one left. But I would suggest that a Trump presidency would benefit both the Appalachian and the Wyoming coal industry. It will certainly benefit the U.S. uranium industry. It will aid permitting in those states where there isn't substantial state opposition. Unfortunately, that's a fairly small list. Texas, Wyoming, Nevada, and Alaska. I think that a Trump presidency may also benefit producers or developers of minerals that are deemed to be strategic. There is increasing noise out of Washington, continuing from noise made by Biden, that we're in a geopolitical war with China, and that we need to reestablish our command of supply lines around a whole host of materials. It's odd that 5 years ago, people like me who were in the mining business were castigated as villains politically, and now the morons in Washington want to subsidize us. Well, I feel a little dirty since you asked me what it would be good for. Certainly being subsidized is more pleasant than being prosecuted. So,
Exactly.
in that regard, I think not just Americans, but also Canadian companies that are exploring for and developing deposits that will contribute to the supply chain of the West, the United States, Japan, Europe, Canada, you know, likely will enjoy political tailwinds that they have not enjoyed for 30 years.
Yeah, I would like if we can cover a few more commodities a little bit later, but actually we can start with uranium first. Russia has imposed restrictions on the export of enriched uranium to the United States. Is this expected for you, and how do you think that will impact the market?
Sort of expected. I mean, it's political comedy. What will happen is that exports of Russian enrichment capacity won't go to the United States now, except when exceptions are negotiated. You'll note that the United States banned Russian imports, and Russian imports doubled during the ban. So the Russian material will be displaced to places like China. And the material that used to go to China will be displaced to the United States. So Putin can look tough without penalty, and Trump can look tough without penalty. All that'll change is that the freight charges will go up a little bit. Atoms are fungible. Atoms generate power no matter where they were enriched and no matter where they're used. I would say that the greatest source of energy in the world that's untapped is the hot air that emanates from the political class. If it could be controlled and run through a turbine, we wouldn't need nuclear power.
Yeah. Rick, I want to hear your thoughts on Paladin Fission deal. I know that you are biased on both, depending on the time frame. However, what is your take on the valuation and the future of this deal, actually?
I am not a Paladin shareholder. I am a Fission shareholder, and I'm becoming a bigger Fission shareholder. I continue to believe that as a consequence of the emergence of a term market, uh, consolidators with pipelines and with development experience have perhaps once in a lifetime chance of becoming big companies. Paladin, with their development experience, has the ability to finance uh, projects off balance sheet by contracting with investment grade counterparties supply offtakes. And in that sense, the merger makes absolute sense. Paladin, however, it has been suggested, knowingly or unknowingly misled the market with regards to reserves and resources. That needs to be thoroughly investigated by Australian authorities. It absolutely positive. That's a serious charge. Uh, the price of Paladin has fallen fairly substantially. And Fission shareholders who believed that they were getting a certain total compensation now see themselves getting 40 or 45% less, and they are unhappy about it. But for me, I've been buying more Fission. If the transaction takes place, ultimately, it will work. If the transaction doesn't take place, somebody else will buy Fission. With regards to Fission, remember that their deposit is contiguous to the best undeveloped uranium deposit in the world, controlled by NextGen. Understand, too, that both deposits are in the middle of nowhere and should not be developed independently. They should be developed together. Paladin, I think, wanted to buy Fission so that they could end up as a minority working interest owner in a consolidated deposit. The next gen management and the Fission management have been at odds with each other for many years. And that personal enmity probably has prevented an amalgamation there. And I think Fission understood Paladin understood the strategic importance of Fission to the overall success and wanted to play a role in that consolidation. That consolidation makes sense. It saves the shareholders of the companies together between $500 and $600 million in co-developed infrastructure. The ultimate takeover partner of Fission will have to be approved by the Canadian government, which means that the largest shareholder of Fission, China General Nuclear, probably won't be allowed to participate. But could Teck participate? Could Cameco participate? Could Rio Tinto participate? Could
Orano.
BHP participate? Probably yes. Probably yes. If the Paladin takeover is ultimately unsuccessful, I believe that Fission will be consolidated by somebody else. The market hates indecision, and the market hates questions that will be decided over time. I have become much more tolerant of both circumstances. For me, if the answer begins with when, as opposed to if, I'm all over it.
Yeah, definitely. And it makes sense with the synergies between NextGen and Fission. Actually, I agree with that because now the companies are spending a large amounts of money doing nothing, actually. What about Orano? Do you see their major role in the Athabasca? Maybe they could be one of the candidates to take over the Fission.
They need to solve their own balance sheet problems. I mean, yes, they're sort of an arm of the French government. Maybe that could happen. They've had a difficult time.
Yeah.
I think partially they've been an expression of a French political agenda and French foreign policy, but certainly they got kicked in the cash flow with the adventures in Niger. And the investment decisions of Orano in France have often been more politically than economically inspired. Certainly, the political friendship between the government of Canada and the government of France is very high. And I think that from a political point of view, the participation of Orano wouldn't run into Foreign Investment Review Act problems in Canada. I just wonder about Orano's. I wonder about their capability to build, what would likely be a $5 or $6 billion mine with a lot of technological complexities. The ideal partner is probably Cameco. They know how to do that. Whether they would be allowed to do it for antitrust reasons is another question.
I remember you had some concerns regarding Denison Mines, their ISR technology, the ability to do it. Do you still have those concerns, or what's your take
I,
on Denison current?
I still have those concerns. If they make it work, it's a long ball home run. I mean, it's really truly a long ball home run. Right now, from my viewpoint, it's a science project. They are having good results on a bench basis, but employing that technology on a bench basis, as opposed to employing that technology in the real world, is a different challenge. And they seem very, very, very determined to do it.
Yeah.
In effect, betting the company. If they succeed, they're going to build a hell of a company. I'm less comfortable with if questions.
Yeah, I get it. But to your point, if they really succeed, they have on Wheeler River on Phoenix deposit, they have $9 or $10 all in sustaining costs. It will be a cash cow. It will be a cash machine if it works, of course.
Yes, when you say they project to have.
Project to have, yeah, of course. Yeah,
if it works.
agreed.
And they have, listen, they have a database unlike any other junior database in the Athabasca Basin. They've been around for a very long time.
Yeah.
They have equity interest to a permitted operating mill and permitted operating tailings facilities. Everybody else has permitting challenges. Denison conquered those permitting challenges 3 decades ago. That makes a big, big, big difference. If you look at Saskatchewan, as I do, as a mining friendly jurisdiction, it will still take probably a decade to fully permit a greenfield operation. And in the case of Denison, been there, done that. It's all over.
Yeah,
Huge advantage.
definitely know how.
Yep.
Yeah. Rick, we know your famous quote about the big money is likely to come in uranium. The easy money has been made. There is real money to be made between the easy money and the big money. Are we in that period today?
Absolutely. Absolutely. I mean, the outcome with regards to uranium seems to me to be completely certain. Completely certain. It takes 5 years probably to play out. And a lot of investors, as we've discussed before, Lucian, seem to have trouble holding stock over a long weekend.
Yeah.
But many things are happening around uranium, including nuclear power plants that were scheduled for shutdown are being extended for 20 or 30 years. These are plants that don't need to be permitted or financed. They're already permitted. They're already financed. The second thing that's happening with these existing plants is big, big companies are signing power purchase agreements from the plants. So the plants don't have to worry about who they're going to sell the power to or for how much. It's all done. Google, Microsoft, these people understand their need for power. They want clean power. They want uninterruptible power. And they want to be ahead of all the retail consumers. And they're willing to pay double the current price for power, which tells you what electricity is really worth. Next, the pace of Japanese restarts is accelerating. All of that inventory, which was held for sale, is now being held for fuel. These aren't plants, again, that need to be permitted or financed or constructed. These are plants that need to be refueled. This isn't demand that takes place years from now. This is demand that takes place now. The third thing is that there's a mass of new power plant construction going on around the world. And these are not small plants of the type that were built in the United States 40 years ago, consuming 250,000 pounds a year. These are massive plants consuming 1 million pounds a year. And importantly, when you build these plants, the lenders are frequently requiring that you contract for enough uranium for long enough that you amortize the loan, which means that these companies will need to enter into uranium supply contracts with producers. This means that unlike any other commodity in the world in the uranium business, the producer will be able to determine how much they sell and at what price over what period of time. This visibility as to the volume and the price associated with sales will lower the cost of debt capital and it will lower the cost of equity capital. Right now, the companies are very opaque with regards to their contracts. This will change because the companies that disclose the terms of the contracts will increase certainty. And that increased certainty will increase their share price. So the share prices between the transparent companies and the opaque companies will give the transparent companies a lower cost of capital. In 5 years, all the companies will be transparent.
Yeah.
It's this arbitrage, Lucian, the incredible, and by the way, I haven't even started talking about the demand from small modular reactors or anything like that. The thing that drove everybody crazy in the uranium stocks 8 weeks ago, to me, is icing on the cake. It's something that impacts demand 5 years from now, 7 years from now, 10 years from now. The deferral of shutdowns, the Japanese restarts, the Chinese new construction, the fact that all of these people have to contract for pounds, that changes the uranium market now.
Yeah.
This will be realized over the next 5 years, and the uranium industry, the viable part of the uranium industry, will reprice. Now, the Canadian and Australian penny dreadfuls, the guys that don't have any uranium, they're just looking for uranium. If the price of something you don't have goes up, it probably doesn't make much difference to you. So your listeners need to understand that they have to take my points in the context of people who actually have economic uranium deposits, a fairly small club.
Yeah. Enough about uranium. Let's move to another commodity, PGMs. Are the platinum group metals a good investment today? And how are you playing this? What companies are on your list?
I shouldn't be doing this, but I have speculated a bit in physical platinum and palladium by buying the trusts administered by my old company, Sprott, the Sprott Physical Platinum and Palladium Trust. I can't help myself. The stuff is too hated, it's too cheap, and the potential for supply disruption is too high. Platinum and palladium prices have fallen ostensibly for two reasons. The first is, no surprise to anybody, Russia needs money. And when Russia needs money, they sell whatever they have on the shelf, including platinum and palladium. They did this in 1990. Assuming that eventually we have peace in the Ukraine, and I'm no geopolitical expert, I just said assuming that, then perhaps that situation begins to resolve itself. The second thing is that the perception around platinum and palladium has been hurt by the perception that the internal combustion engine is going to go the way of the dodo. And therefore, that auto catalysts, things that are used to reduce emissions from internal combustion engines, will go away. I don't believe that internal combustion engines are going to go away for 30 years or 40 years. I don't see an awful lot of electric vehicle charging stations in places like Malawi or Sudan. So I believe that the internal combustion engine will be with us for a long time. And I don't see crowds of young people wandering around universities near me with billboards demanding more smog. Listen, there is incredible price elasticity in platinum and palladium. It takes about $100 worth of PGMs to fabricate a catalytic converter that enables the sale of a $50,000 or $60,000 car. If the price of PGMs were to double, it wouldn't change the shelf price of the automobile. It wouldn't make any difference at all if the price doubled. So the price can go up. The last part of the equation is as follows. Platinum and palladium are produced mostly in South Africa and Russia, with some upside to production in Zimbabwe. If there was a political disruption or a social disruption in Russia, South Africa, or Zimbabwe, you would see global platinum and palladium supplies plummet. Then the price would have to go up, and it could go up. Something that must happen and can happen will happen. Now, I don't think that there is a probability of the supply disruptions I'm talking about, but there is a possibility. And the pricing impact of that possibility, which would, I think, be a fairly immediate double of PGM prices, would be very interesting to me. Meanwhile, I don't see very much downside from these prices. So a bet where there's a possibility of substantial upside and no probability of a downside is not an unattractive bet. Expressing the bet in equity markets is much tougher. For an American citizen to buy Norilsk, which would be the best bet, is problematic.
Yeah.
The Russians don't want us to. Well, maybe they do. But the Americans certainly don't want us to. And I happen to be an American with a banking application. So I'm not going to buy Norilsk. The South African producers are challenged for a different reason. it is uncertain whether the ANC or the EFF will continue to allow private ownership of mines in South Africa. And so the South African miners aren't making capital investments because they're not sure who's going to own the capital. That means that the labor force is extremely inefficient, and the labor force is paid for the utility they generate, which is to say low, because they employ no capital. So it's very difficult, other than the Anglo-Plat's open cast operations, to find an investable project in South Africa. What that has meant is that I myself am looking at exploration projects, advanced exploration projects for PGMs worldwide, outside of South Africa, Zimbabwe, and Russia. And thus far, I've only been able to find one, which is called Bravo in Brazil. Is it a certainty? No, not at all. Have the exploration results been good? Yes, excellent. I don't have to worry about current low prices because that mine, if it becomes a mine, won't be in production for 5 or 6 years. It has the earmarks of something that might, notice I said might, not will, might become a tier 1 deposit. But of course, you're taking price risk, you're taking Lula risk, which is to say political risk in Brazil, and you're taking the risk that the current good exploration results turn south, turn bad. It's not for the faint of heart.
Yeah. A lot of my followers ask me to ask you about tin. What's your take on tin, short term, long term, and how are you playing tin? What are your
Uh,
positions over here?
the tin market has done pretty well in the last 5 years because the traditional tin producing territory has begun to be more environmentally concerned about river dredging operations. So the cost of producing tin in Southeast Asia has gone up. Uh, Tin has a lot of technological applications, particularly in joints, solder, stuff like that for high-tech applications. Uh, if I could find really good tin exploration vehicles, there's lots of terrain that's prospective for tin in Bolivia, in Brazil, places like that. The only tin stock I own, and I own a lot of it, is Alphamin. Uh, the challenge that you have with Alphamin is that they produce in a lousy part of a lousy country. They are in northeastern Congo, which is the most violent, uh, the roughest part of a country that sort of defines violent. The management team has done a spectacular job building a remote deposit in a hostile location, trucking concentrate uh, out of an area where for $50 or $100 you can get somebody killed, where every truck of concentrate is worth $500,000. I'm astonished at what they do. I'm delighted with the dividend that they pay me. I'm delighted with the exploration upside, and I'm afraid every month that something will go violently wrong.
I can imagine that. Rick, what about coal? Is coal here to stay? What do you think?
I mean, here to stay. Um, the largest year for coal demand on record is 2024.
There we go.
It doesn't seem to me to be a commodity that's in retreat. Um, the Chinese, who are the largest installers of solar capacity in the world and the largest installer of nuclear capacity in the world, are also the largest installers of coal capacity in the world. Lucian, what the big thinkers don't seem to realize is that there are a billion people on Earth with no access to electricity at all. They want to live like you live and like I live, and that takes electricity. And the cheapest cash cost to produce electricity in the world, including sunk uh, power plant cost, is coal. For Sri Lanka, for India, for Cambodia, for Malawi, uh, coal is a necessity. People say, well, what about alternative energies? So let's do the math, okay? In the last 40 years, we've spent almost $5 trillion on alternative energy generation. 5 trillion US dollars, a big number. We've reduced the market share of fossil fuels from 82% to 81%. And when you talk about carbon, when we talk about carbon, Lucian, we talk about carbon from the Western perspective. From the point of view of poor nations, the global South, they would suggest to you and I that carbon emissions be measured per capita, not per nation. So the idea that, as an example, China produces twice as much carbon, generates twice as much carbon in the United States, is explained away by the fact that China's population is 4 times the size of the United States. In other words, on a per capita basis, they consume or produce half as much, not twice as much. And the situation is more extreme in places like Indonesia, Brazil, India, Pakistan, which means that if we are going to have a reduced carbon environment, the costs will likely be disproportionately on Western countries. If you look at the political and economic impact of that in a place like Germany, you'll see the problem right away. But the problem is bigger than that, Lucian.
Yeah.
The global South looks at the carbon problem and says that current emissions are a small part of the problem. Historic emissions are the real problem. And all of the historic emissions come from the West. What that suggests is that all of the costs of abatement have to be borne by the West, or they won't be borne. And they will not be borne by the West. If you were honest with the German public, the Belgian public, the Croatian public, the American public, the Japanese public, and you said, in order to have the world envisioned by Al Gore and Greta Thunberg, your energy costs would have to go up by 500% tomorrow. If you were honest with the voters, what do you think the response of the voters would be?
I can imagine what the response would be.
The bottom line is that whether or not the big thinkers like it, coal has a fairly bright future. Will aggregate coal demand increase to the extent that it is now? No, it won't. It's been on a real tear. But there's 1 billion people on Earth that have no access to primary electricity.
Yeah.
There's another 2 billion people on Earth who have access to only intermittent or unaffordable electricity. All those people, Lucian, want to live like you. They want to have a well-lit room with 3 clocks in the background.
Okay.
And that requires efficient baseload generation, which for poor countries is spelled COAL.
Yeah, clocks are on batteries, but never mind. One other question about the coal. What do you think, who will be the successful bidder for Anglo America's coal assets?
I don't know the answer to that. I'm hoping it's a Glencore affiliate. But I don't know the answer to that. There's discussion in markets that were they allowed, Reliance, the big Indian conglomerate, would like to bid. And I have no doubt that were they allowed to participate, CITIC, China International Trade and Investment, could arrange a Chinese coalition, which would be a competitive bidder.
Okay. One interesting commodity to me is tungsten. And what's your take on the future performance of tungsten, and how will the China ban reflect the price on the prices?
China's the dominant tungsten player. Chinese production partially in fairness because of very low Chinese environmental standards, very much like rare earths, means that Chinese tungsten production is cheaper than global tungsten production. One thing that's happening in many commodities, including raw earths, is that both the Chinese populace and the Chinese government are less tolerant of these low environmental standards. So the costs of producing these materials in China are increasing fairly rapidly, which will be reflected in the world price. I've done some work in the tungsten business, and I've done enough work to know how much I don't know. So I need to say that that's a work in progress. I was more attracted to vanadium than to tungsten. I began to get involved in vanadium about 5 years ago. In retrospect, I wasn't early, I was wrong. My suspicion is that the vanadium market will do well, but clearly my entry 5 years ago was way, way, way premature. And I'm afraid if I entered the tungsten market, I will do the same thing to it that I did to the vanadium market.
Okay.
I'm always concerned about small markets. I'm concerned about tin for that reason, vanadium, tungsten.
Yeah, small.
It's a lot easier to be right in markets like coal, oil and gas, and copper. And I think at age 71, I deserve to assign myself easy challenges.
You definitely do, yeah. Rick, what's your take, if you have any, on helium?
On
Helium,
helium,
yeah.
I'm attracted to helium. It again is a tiny, tiny, tiny market. Uh, Helium is also not rare. We haven't found it because we haven't looked for it. And we haven't looked for it because we produce so much as a byproduct of natural gas that it always seems to be a market in search of a bid. If I could find a helium developer that I thought was in the lowest cost quartile of helium producers worldwide, I'd be very interested in buying it. But the helium market is suffering the same way the North American natural gas market is suffering. North American natural gas is suffering because it's a byproduct of oil drilling, and helium is suffering because it's a byproduct of natural gas drilling. So while I'm attracted to the story, every time I look at a helium developer and I put the pencil to it and I compare it with the helium that is produced by natural gas processors, I have a very difficult time allowing myself to be parted from my money.
Fair enough. Precious metals. We didn't touch actually on precious metals. First, silver. Do you fancy physical silver?
I don't own very much physical silver. I have a little bit. I have a lot of physical gold. In my physical portfolio, I mean, I speculate occasionally, like I did with platinum and palladium, but mostly I buy precious metals physically for insurance, and gold is the insurance, not silver. My experience has been that when circumstances generate an upside in the gold market, in other words, a real true precious metals market, which by the way, I believe we're in, at some point in time, leadership changes from gold to silver. I don't know when that happens, Lucian, but believe me, you won't need me to tell you it has. When that happens, it's really, 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 truly dramatic. I bought a lot of the junior silver stocks about this time last year, not because I thought silver was going to go up, but simply because they were hated. I mean, truly, truly, truly hated. The aftermath of the silver squeeze meant that there was a whole generation of silver adherents that had gone from being in love with the commodity to hating the commodity. And I figured all the sellers were done. The problem with that thesis is that those stocks are uniformly up 200 or 300%. They don't need to go up anymore. Now silver needs to go up for them to go up. My experience has been that precious metals bull markets are led by gold. And after the narrative has been established, when the generalist investor comes into the space, the generalist investor is more interested in upside than protection. So leadership goes to silver. But I think we're very much still in the gold phase. And note that right now, with confidence high, gold is soft, at least in US dollar terms. This will change, I think, Lucian. At the beginning of the interview, we talked about the US balance sheet. We talked about the fact that aggregate private wealth in the United States is estimated at $141 trillion, and on and off balance sheet liabilities, net of the federal treasury itself, is $130 trillion.
Yeah.
This is an irresolvable problem. What will they do? Well, if past is prologue, in the decade of the 1970s, the last period of dollar weakness, what we did is we reduced the purchasing power of the US dollar through inflation by 75% over 10 years. That reducing of the purchasing power of the US dollar had the impact of taking the gold price from $35 an ounce to $850 an ounce. The next period of concern we had for the dollar was the period 2000 to 2010. Gold's response was much, much, much more muted. It only went from $253 an ounce to $1,700 an ounce. It's my belief, Lucian, and I should say I'm a credit analyst, I'm not an economist. It's my belief that the only way that we have out of our debt crisis is to reduce the purchasing power of the US dollar. I don't believe that we have the political will in the United States to actually reduce benefits. They'll reduce them for me. I'm an old, fat, white, rich guy. So they'll means test Social Security. They'll take away the contribution cap, but it doesn't matter. The debt's too high. An old codger like me, who is promised whatever it is, $4,000 a month for Social Security, will continue to get his $4,000. In other words, they'll keep the promise. The problem is that after 10 years, that $4,000 will buy $1,000 worth of goods and services.
Yeah.
When you reduce the purchasing power of the dollar, traditionally, the store of value when fiat currencies depreciate has been gold. And I think that's precisely what's going to happen for the next 10 years. I think that the purchasing power of the US dollar will decline by about 75%. If that occurred, it wouldn't surprise me to see the gold price increase fourfold, which is to say no real increase, but merely hold its own value.
Yeah, Rick. Final question. It's about oil. What's your take on oil? And actually, is the oil heading to a phase of hated commodity?
Oil has been hated for a long time. If you look at the free cash flow of oil producers and their net present value relative to their market capitalizations, these companies are cheap, 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 cheap. It doesn't mean that oil can't get cheaper. If there was an elimination of the hostility in Ukraine and Russian natural gas could re-enter the European market, I think oil could get cheaper. What people seem to neglect is that when people are valuing oil companies, they act as though Angela Merkel and Greta Thunberg were right. They act like peak oil demand occurs in 2030. Peak oil demand probably occurs in 2065 or 70. So the tail values that you assign oil companies have to go way, 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 way up. The other thing that's beginning, well, it's helpful for the oil price, it's hurtful for me, is that the technological revolution that drove the US oil industry, I'm not trying to say it's over, but we have drilled the majority of the grade A locations we have to drill in the United States. So our ability to continue growing US production to the extent we have for the last 15 years is being challenged. Now, there's lots of room to improve recoveries through technology. And they're spending billions and billions and billions of dollars on those technologies without being smart enough to understand how that's going to work or if it's going to work. I need to look at the undrilled inventory remaining in the United States and question whether the incredible business that U.S. onshore drilling has been for the last 15 years continues. If it does, then oil prices continue to moderate and natural gas prices stay weak. If it doesn't, that's the supply shock of all supply shocks.
Yeah. Rick, are you still look at other people's portfolio and rank them?
Absolutely. I teach a lot, but I learn more than I teach. Uh, Anybody who likes what I have to say about natural resources and wants to personalize it, even those who don't like what I have to say and want to personalize it, are invited to go to my website, ruleinvestmentmedia.com, all one word. List your natural resource stocks there. I, for no charge and no obligation, will personally rank them 1 through 10, 1 being best, 10 being worst. Notice that the database is frozen at a place in time. If facts change, the rankings change. Feel free to resubmit. Please don't submit laundry lists of 60 or 70 stocks that you would like to buy. Just submit the ones that you already own. I'm getting murdered by these people who are submitting libraries of stocks. Also, I was recently on vacation, so I'm about 200 rankings behind. Be a little patient with me. If it takes you 6 or 7 days to get your rankings, understand that this is free. It's a labor of love. And finally, please no tech stocks, please no pot stocks, please no crypto, natural resource stocks only, please.
Yeah, and any boot camps, symposiums, anything preparing?
We have a boot camp that we're going to do, which is really ambitious. In response to our customers' wishes, we're going to do a gold boot camp. The fundamentals of gold and gold investing. Big, big, big topic. It's going to be 8 hours. There's a lot to cover. Please don't come to the boot camp if you're a tourist. Lucian, you know we work people hard in our boot camps. They are very detail oriented. They are very fast moving. We give you 8 exhausting hours, and we give you access to the recordings for a year, which makes sense because we believe that people need to retake the boot camp. In other words, we believe that they need to expose themselves to that 8 hours 4 times. So if you're a tourist, if you're there for entertainment, don't come. If you are or aspire to be a serious gold investor, do come. Remember that every education product offered up by Rule Investment Media and the Rule Classroom comes with an unconditional money-back guarantee. If you sit through 8 hours of the boot camp and you don't think you got your money's worth, just email me and I'll give you your money back. I'm delighted to say in 28 years of unconditional money-back guarantee, we have had to refund substantially less than 0.1% of the tuitions charged. But our guarantee that you will get your money's worth is the fact that if you determine that you don't, we'll give you your money back.
That's fair. Mr. Rick Roll, thank you for coming to my show. Great chat as always, and I look forward to host you again soon.
Lucian, thank you. And thank you for your support and attendance at the Natural Resource Investment Symposium in Boca Raton. We believe with your help and your listeners' help that it is and will continue to be the best natural resources investment forum in the world. And we look forward to seeing you in Boca this coming July.